We are getting the BOK rate decision. It's a hike to 3.25% from 3% as economists had expected. We're talking about 15 of 17 surveyed economists were expecting that downshift. Kathleen Hayes is in front of the BOK right now for us. So Kathleen, just what are your thoughts about what just happened?
Well, if I were the Bank of Korea, I would have probably said this is the appropriate thing to do. There were other reasons why they were weighing 3.25 versus 3.5 as the rate, the level they have to get to right now. And at the last meeting, there was more urgency for a 50, even though the Bank of Korea says they don't base policy necessarily on exchange rates, when the won was still so weak for them to do something to help support it. And in addition to the fact they've got too much inflation, they have to get inflation down. Now the won is stronger. Now there's more concern about the slowdown in exports, the slowdown in China, a global recession, et cetera, et cetera, et cetera. So it's one more reason why it's appropriate to do the 3.25, especially when you're kind of on the fence, which would be correct, at a time when the credit markets could use a little support. And that's not even a big source of support. They're just not being as aggressive as they might have been. And after this big sell-off in all kinds of credit facilities in Korea, short-term, long-term, you name it, this is a time when one of the biggest concerns right now, probably for the Bank of Korea, is that the markets have stabilized. The credit market meltdown is not happening now, but you're still concerned about what could happen next. This seems like a prudent error on the side of making a mistake that you might regret later.
Kathleen, I want to bring in Kathleen Oh now, our guest at Bank of America Securities. Kathleen, I want to get your reaction to that move as well. On the smaller side, I mean, the Fed is talking about downshifting rates. The Bank of Korea is actually going ahead and doing it. But to Kathleen Hayes' point, to what degree was their hand forced by the circumstances in the credit market?
I think the Bank of Korea has risen its concern on the credit market risks recently. In the last meeting minutes, some of the members did point out that there is an increased risk on the financial stability side. But for now, I think most of the MPC members are concerned primarily on the inflation issues. Before they, control the inflations, they probably would have to use the non-policy rate measures to take care of the credit market issues, such as the facility lending of the short-term and long-term rates, and injecting the liquidity into the market without moving the policy rate on turning around the direction from the hiking now. I think once the BOK achieves the price stability that they want by the first quarter next year, then they probably would like to see more attention to the credit markets then. But I think credit market issues itself is not major enough for now for the whole economy before the inflation issues to be taken care of.
We do have the revised growth and CPI forecast as well. The BOK now coming in with the 2023 GDP growth seen at 1.7%. The projection earlier in August was for 2.1%. So perhaps not surprising that they're now downshifting on the rate hikes. Also revising their 2023 CPI forecast to 3.6% versus August's forecast of 3.7%. So Kathleen Oh, yeah, I mean, we do have that growth downshift, but CPI is not coming down as much, or at least there are expectations from the BOK. So when can we expect some price stability, especially closer to the BOK's target rate?
So looking at the BOK's forecast coming down from only 10 basis point from 3.7 to 3.6 now, I can assume that their quarterly projection probably puts above 5% headline inflation through the first quarter of next year at least. I think that puts the pressure on the BOK that they should continue to hike at least the February meeting from January as well, and that's in line with our terminal rate hike forecast of 3.75%. But now I see that the growth number has come down to 1.7%, way below the potential growth. So that also puts a risk onto the terminal rate hike to maybe around 3.5%. But still, the inflation rate, inflation level itself looks pretty driver for the hawkish BOK.